I guess I'm looking for still a simple layman's term way of understanding what the merge is in the Ethereum network. Can you take us through why it's important?
So good morning, Dom. And what's happening tonight is that roughly at midnight on the East Coast, Ethereum is going to change the way that it secures its network and verifies transactions. Right now, Bitcoin and Ethereum each have their own vast network of miners all over the planet running highly specialized computers that are crunching math equations in order to validate transactions. It's called proof of work. It uses a ton of energy, and it's one of the biggest critiques of the industry overall. But after tonight's upgrade, Ethereum will migrate to a system known as proof of stake. This model swaps out miners for validators, and these validators are not running large banks of computers at data centers in Texas. Instead, what they're doing, Dom, is that they're staking their Ether tokens, essentially locking them up. And by doing that, it gives them the right to validate blocks of transactions. The top line here, as you said, the total energy use of the Ethereum blockchain is expected to drop by more than 99%. I will say this, if the merge is a wild success, I'm told that users won't be able to tell that anything has changed. Ethereum won't become faster, cheaper, or more scalable after the merge, at least not yet.
Mac, can I stay with you for a second here? So in essence, I'm not asking you to make a call on which is better, which blockchain is better, which coin or token is better. But what does this do for Ethereum as a network, as a construct for blockchain transactions in the future? Does it make it relatively more or less attractive than, say, other networks out there?
Well, it certainly puts to rest a lot of the arguments that these Ethereum killers, Solana and Avalanche, some of these rival blockchains, will eclipse Ethereum, because even though we won't immediately see cheaper transactions or a blockchain that moves faster than it does right now, it does set the path. It sets Ethereum on the path for those upgrades. And remember, Ethereum has really set itself apart as more of an operating system for the industry. So the vast majority of apps are built on top of Ethereum. And so this upgrade is a big deal, not just for this one blockchain, but really for the sector overall, Dom.
All right. So for the sector overall, that's where we bring in Devin Ryan here. Devin, this is something that has been talked about for quite some time. There's been a lot of enthusiasm built into it. And for that reason, Ethereum prices over the more medium term have outperformed Bitcoin prices. I wonder, though, given what we saw yesterday in terms of the massive risk aversion trade that hit not just stocks but crypto as well, is this enough to reignite some of the, I guess, enthusiasm for cryptocurrencies, enough so that the industry stands to benefit?
Hey, good morning, Dom. Well, first off, I think Mackenzie hit the nail on the head. This is a process, so this is critical to getting the foundation right for Ethereum, and I think over the long term is a very big deal. In the near term, there's a lot of things that still don't change, and will need to over the coming years to really, we think, propel Ethereum to be what I think its potential will be. So this is one kind of step. In terms of the industry, the opportunity for firms like Coinbase or Robinhood, they are correlated to growth in adoption and just asset prices, right? So over the long term, if this makes Ethereum a better platform, a better base layer to build off of, that means there's going to be more development on it and likely more layer 2 applications and therefore greater market value in the ecosystem. So that's good, over the bigger picture. Over the more intermediate term, as you move to proof of stake, firms like Coinbase offer staking services. And so, they have about $25 billion of Ethereum custodied on their platform today. That's, 12% of the market cap. That's our estimate. But that's a large percentage of Ethereum's market value sitting on Coinbase. And so to the extent Coinbase users are interested in generating rewards, staking their Ethereum, Coinbase can earn a spread on that. And we estimate that can equal hundreds of millions of dollars over the intermediate term. So there really is a real revenue opportunity. But we're talking about, it doesn't all happen on day one. This is a process we're looking at over the next year to 2 years. But to take a step back, you have to get the foundation right before you can build a house that's going to stand for 100 years. And so that's the way we're thinking about this. It's a critical step, but it is one step of numerous that will have to happen for the industry.
Devin, let's play a little scenario hypothetical analysis here. Let's just assume that cryptocurrency prices hypothetically go lower from here. Are these companies, Coinbase and Robinhood, companies that have a strong enough balance sheet or the ability to raise capital effectively enough to weather downturns when there is possibly a downturn in the overall crypto market?
It's a great question. I think a question every investor should be asking about all fintech and tech stocks. And when I look at those two specifically, one of the reasons that we like them, not just in near term, because the near term is very uncertain, but long term is because we think they will be winners because of the capacity and strength of their balance sheets. And we don't see need to raise capital. If anything, Robinhood is right on the verge, if not already, cash flow positive. So they really took some hard steps, made some headcount reductions over the last few months here. On the flip side, they're going to benefit quite a bit from higher interest rates. So they have $6 billion of cash, but are moving into cash flow positive. So that's going to be a catalyst for them, in our opinion. And then Coinbase has $5-6 billion of cash as well, with a lot of liquidity. And so they're operating at a modest loss, almost intentionally to grow their business. We think that they could tighten that even further if the prices, to your point, Dom, take another drop from here. So no doubt it's a difficult operating environment at the moment, but those are two firms that we're not worried about in terms of balance sheet strength and ability to weather what could be still an extended period of choppy backdrop.